It was only a matter of time. When the US pulled out of the 2015 Iran nuclear deal and reimposed sanctions on Tehran last year, it gave out temporary waivers to allies and major trading partners so they could keep buying Iranian oil. But on May the 1st, those sanctions will come into full effect, and there won't be any exceptions.
The goal remains simple: to deprive the outlaw regime of the funds it has used to destabilize the Middle East for 4 decades and incentivize Iran to behave like a normal country.
Iran's oil output is now down to 1 million barrels a day from 3 million before sanctions were reimposed in November. Last year, Iran earned $50 billion from oil sales, which the US now wants to eliminate. Brent crude reached $74 a barrel on the news, its highest level in nearly 6 months. That's as investors worry about the impact the sanctions will have on global oil supplies. Pompeo says the waivers were granted to give countries time to wean themselves off Iranian oil. Greece, Italy, and Taiwan have done so. But India, China, Japan, South Korea, and Turkey are still buyers.
China has always opposed the U.S. imposition of so-called unilateral sanctions and long-arm jurisdiction. China's cooperation with Iranian companies and Iran is open, transparent, reasonable, and legal, and should be respected.
Washington says Saudi Arabia and the United Arab Emirates have committed to covering the supply gap the sanctions will create. And it's given Iran's customers a clear ultimatum: change oil suppliers or get burned. Paolo Montesilio, TRT World.
Let's get more on the story now with Ellen Wald in Jacksonville, Florida. She's the president of energy industry consulting firm Transversal Consulting and author of the book Saudi Inc. Welcome back to the program, Ellen. First, the Trump administration first shocked oil markets by announcing these waivers 6 months ago. It shocked them again by saying that it's going to cancel them. What impact will this move have on global oil supplies, but also the price of oil as well?
This is definitely already sending oil prices up. In fact, we could see that as soon as yesterday evening when the news first started to come out. Oil futures started to rise. We're seeing WTI over $65 a barrel, and Brent, as you mentioned, is also up as well. The reason is mostly because a lot of traders believed that these waivers were going to be renewed. And so the news really does come as a shock, I think, to a lot of the oil market that saw these as basically being continued. And the real question is, it's pretty much assumed that all of the Iranian oil on the market is not going to disappear, but that a significant amount will go. India's already indicated that it's not importing Iranian oil in May. Japan and South Korea, and likely Turkey will follow as well. So even if it's not zero, there will be a significant loss. And the question really is, where are these extra barrels of oil going to come from? And if they're not replaced, then we can expect prices to continue to rise.
Yes, on that issue there, the Trump administration has also said that it's spoken to Saudi Arabia, the UAE, and other major oil producers who have committed to making up for that shortfall in order to prevent a global oil price shock. Do you think that'll work?
Well, this is where things are getting a little bit tricky, because there seems to be a disconnect in terms of what exactly has been agreed to. Pompeo and Trump are putting out there that these producers, Saudi Arabia and UAE in particular, are going to increase production to compensate for lost barrels. But when you look at some of the other statements coming from Saudi Arabia or other statements coming from State Department officials, it's clear that that's not exactly what has been discussed, that there are negotiations for these countries to do that. Saudi Arabia is committed to stabilizing the market, but stabilizing the market for Saudi Arabia does not necessarily mean replacing all of this oil. Saudi Arabia is going to wait and see if customers are putting in orders for their oil. It's likely they'll fill those requests, but that doesn't mean they're just going to start producing to compensate for that lost oil. So we could have a pretty touchy situation that develops between the Trump administration and Saudi Arabia, as particularly if the president thinks that there was a commitment to fill those barrels, but Saudi Arabia does not see it like that.
And just quickly, Ellen, let's talk about the impact on the Iranian economy. It's already being crippled by Trump administration sanctions, and now this. What is that going to do to the already fragile economy?
Well, this is a really interesting situation here, because one of the issues is that the Pompeo and Bolton and the State Department don't really seem to have articulated a clear idea or a clear vision of what they want to see happen with Iran. They clearly want Iran to stop being able to fund Hezbollah and Hamas and other terrorist groups, but they haven't looked at the picture of, well, what happens if the Iranian economy does collapse? They've indicated that the sanctions have already pulled about $10 billion of Iran's revenue off the table. Can they pull another $10 billion off the table with these tightening sanctions or not? Can Iran sustain its economy with just 40 or $30 billion of revenue from oil? And that really remains to be seen.
There's some very big questions left to be unanswered. Ellen Wald, thank you again for your analysis.